Yes, guys. So welcome back. We have covered transition to IND AS and whether phase 1, phase 2, phase 3, phase 4 categories that we have seen. But from here on, we will start looking at some serious stuff. To begin with, I will talk about presentation of financial statements. What is presentation of financial statements and how is it important? Remember, guys, a framework for presentation of financial statements have to be in a particular format only. I don't know how many of you have seen this, but if you follow an XBRL software for ROC filings, there's a particular format based on which the XBRL filing has to be done. That means the framework for presentation of financial statements is rigid. You cannot go anything beyond that. Coming to your income tax as well. You prepare whatever income tax schedules and prepare a financial statements as per Income Tax Act. There's a particular ITR form which you have to fill, and the ITR form will have certain framework, and based on that set framework only you are supposed to complete your income tax filings. Same way, even your Companies Act will require you to present your financial statements in a particular framework only. That framework is given as per Schedule 3. But remember, there is also another standard which has been included under your IND AS, which is your IND AS 1, which talks about presentation of financial statements and discusses in detail about the minimum requirements to be presented in preparation and presentation of financial statements. The minimum requirements in preparation and presentation of financial statements have been stipulated under IND AS 1, which is a newly introduced standard. It will be a complete waste if you would have compared IND AS 1 with AS 1. AS 1 only talks about disclosure of accounting policies, while IND AS 1 not just talks about disclosures, but specifically talks about presentation of entire financial statements as a whole. When I say entire financial statements, requirements in presentation and balance sheet, requirements for presentation in statement of P&L, requirements for presentation in statement of changes in equity, and also in your disclosures as notes to accounts. Everything is discussed under disclosure in notes to accounts. Specific accounting policies adopted in preparation and presentation of financial statements is a very, very, very small, tiny segment. So, IND AS 1 has increased the scope of your standard by leaps and bounds by only talking about presentation of financial statements and discussing about the minimum requirements in preparation and presentation of financial statements. Clear? However, any corporate entity to which IND AS is applicable, corporate entity in the sense any company registered either under Companies Act 2013 or under earlier Companies Act 1956 shall apply only your Schedule 3. Your Schedule 3 is also divided into two parts, Division 1 and Division 2. Division 1 applies to those corporate entities which are preparing its financial statements in compliance with your company's accounting standard rules 2006, that is as per IGAP. But for all corporate entities which have been preparing which are required to prepare its financial statements under company's accounting standard or IND AS rules 2015 shall start adopting your reporting framework under Division 2 of Schedule 3. Clear? So Division 1 and Division 2, two divisions have been created. As a part of our discussion, we will more be putting our emphasis on Division 2. Division 1 IGAP financial statements, I think most of you are pretty comfortable with, and I don't want to disturb you there. But Division 2, which is a new schedule or new Schedule 3 which has been introduced, really important for you to understand how do you prepare a Schedule 3 balance sheet out there. Clear? So let's go into discussion regarding presentation of financial statements and what is the framework. Your framework for presentation of financial statements under IND AS or under IGAP will fundamentally follow four different principles. First one, what is the objective of preparing financial statement? Fundamentally, my objective of preparing a financial statements is to present a true and fair view of the affairs of the business. That is my objective. My principal objective is to present a true and fair view. of all the affairs of the business in the form of financial statements, which will enable the user to make an economic decision based on these financial statements. If you conceal any fact which would have affected the decision making of the user, then the objective of the financial statements itself is defeated. To make sure that the objective is complied with, you need to make sure that the financial statements drafted are reliable and relevant. Reliable for the user to make economic decision making, relevant because you have to include all facts and circumstances which represents a true and fair view of the affairs of the business. Clear? That is the first framework for preparation of financial statements. Concept of capital and capital maintenance. Your capital expenditures, revenue expenditures is fundamentally a very important concept. They are fundamental accounting principle based on which your framework has to depend on. Qualitative characteristics, we will discuss about that. Definitions, recognitions and measurement of elements, which is discussed as per multiple standards. Your definitions, recognition and measurement of elements is defined as per IND AS 16 for property, plant and equipment, IND AS 38 for intangible asset, IND AS 40 for investment property, IND AS 105 for non-current assets held for sale, IND AS 2 for inventories. So the last part of the framework is dependent upon multiple standards which are applicable. Here, your framework is never defined by an IND AS. Your framework is only dependent upon Schedule 3 of Companies Act. Framework of financial statements of an enterprise is governed by the prevailing statute, which is Schedule 3 of Companies Act. However, if there is a conflict, generally there is no conflict, but if there is a conflict between the statute and the IND AS, the requirement of the IND AS shall prevail. IND AS 1 will provide the minimum requirements for presentation and disclosures to be presented in financial statements. Clear? Who are your users? Why do I need to talk about the user? Because if the objective of the financial statements is met, then it should enable the user for making sure that they use the financial statements to make an economic decision. To make sure that the users are applying the results of financial statements presented in a reliable and relevant manner for economic decision making process. So generally the users of financial statements are my employees, the public, providers of finance or lenders, investors, the suppliers, government agencies for collection of taxes as well. The three underlying assumptions based on which we prepare the financial statements is an accrual basis, going concern and the materiality. We will have further discussion on these three topics under various IND AS, but whenever I say accrual, we have already discussed about this in earlier concepts because this is a primary basic concept that we talk about. Going concern, this is the fundamental basis for creating a differentiation between a current and a non-current asset. Had there been no going concern, I would have never had a classification of current and non-current separately. Materiality is very important in making sure that the objective of financial statement is met. Too much voluminous content, which is irrelevant in decision making process, does not satisfy materiality. At the same time, any particular fact, if when concealed, would have affected the decision making of the user, then definitely the financial statements have not considered or have completely defeated the objective itself. So materiality should normally applied in two scenarios. One is quantitative materiality and other one is qualitative materiality. Quantitative materiality is with reference to the volume of the transaction or the numbers in the transaction, but qualitative materiality, irrespective of the quantity of the transaction or the volume of the transaction, the nature of transaction becomes important. That is regarding materiality. What are the qualitative aspects in financial statements? Qualitative aspects of financial statements is understandability, your reliability, comparability, and also your relevance. Sorry, the understandability has come up twice. but actually the other part should have been relevance. Relevant for decision making, reliable because it has used sufficient information to present true and fair view of the affairs of the company, comparable to your previous performances, and also comparable to your to the peers of your similar industry, and should be in a position in which every user can understand the aspects of financial statements drafted. Now guys, there are 4 metrics for measurement. We will use different metrics in different standards. Fair value, historic cost, current cost, realizable value. Fair value, you have a separate standard which discusses about it under Ind AS 113. Historic cost is a concept that you normally come across under cost model, which we will see under Ind AS 16, we'll also see in Ind AS 38, and we will also see in Ind AS 40. These 3 standards, we do discuss about the concept of historic cost. But current cost is a concept which we only use limited to Ind AS 36, that is impairment, and it has slightly lower relevance. Realizable value is something we use in multiple situations. We use it under Ind AS 2. We use it also under Ind AS 36 impairment. We'll also use it under Ind AS 105 non-current assets held for sale. Multiple cases we do have different metrics of measurement, and each metric of measurement is used in various standards. How to determine fair value? We will discuss under Ind AS 113. Realizable value is nothing but the price that I would get when I sell the particular asset or when I transfer a particular liability. Historic cost is the original transaction price, the price at which the transaction has occurred. Current cost, we will come to this concept with a limited use. When we come to this concept, I will definitely discuss about what is your current cost. Now, finally, we'll have to look at what is the financial statements drafted as per Schedule 3 or Division 2 of Schedule 3. Guys, Division 2 of Schedule 3 shall apply to all companies which are preparing its financial statements as per your company's Ind AS rules 2015. Now, how are these financial statements actually drafted? Let's see the framework for the balance sheet first. Division 2, applicable only to companies which are required to prepare financial statements in compliance to what? Financial statements in compliance to companies' Ind AS rules, Indian Accounting Standard Rules 2015. Is Ind AS rules 2015. Now, according to this Division 2 Schedule 3, you will have to prepare your financial statements in 4 parts. What are the 4 parts in which I prepare my financial statements? First part is your balance sheet, obviously. Second one is your statement of profitability. Third one is your statement of cash flows. Fourth one is your statement of changes in equity. And finally, your notes to accounts. 4 statements together with notes to accounts, totally 5 parts. Now, let's try to understand how a balance sheet is drafted, how a statement of profitability is drafted, your statement of cash flows or statement of changes in equity is drafted, and what are their minimum requirements in notes to accounts. That understanding you will only get when we discuss about IND AS 1. Your IND AS 1 will particularly talk about what is the requirement in the balance sheet, what is the minimum requirements for presentation in a statement of profitability, what is the minimum requirements in cash flow statement will be only given as per your IND AS 7. Apart from this, which is discussed under IND AS 7, all other requirements will only be discussed as a part of IND AS 1. Clear? So that will bring us to the end of discussion on this particular topic, that is presentation of financial statements, where we said we'll have to use a part of Schedule 3, we'll also have to use a part of IND AS 1, combined put together will give us a presentation framework for your financial statements.